depreciation. I think that's what we're talking about here. We account for this depreciation using the matching principle. So basically what that is we want to match the expenses at the same time as the revenues that they're related to or that they generate. The point of the matching principle is to make it more difficult for companies to financial engineer or fudge the numbers. This gives better transparency to investors and management on how well they're actually managing the assets under their care in the business that they're doing. However, that's just how it's used in financial accounting. The goals of tax accounting and the goals of financial accounting are very different, and that's why we take different approaches. One of these major differences is with bonus depreciation. This is when small businesses get to recognize all of the depreciation upfront or a portion of the depreciation upfront on their taxes. Since we were specifically talking about vehicles here, this is the limit for a sports utility vehicle in 2023. Bonus depreciation is getting phased out each year. Starting in 2023, it went down to 80%, then it's 60%, and it's just going to keep on going down until 2027 when there's no more bonus depreciation and everybody just has to follow the regular depreciation schedules on their taxes. There are rules on how you can recognize things for depreciation. It has to be for business related or income producing activity. And when it comes to vehicles, there's a lot of expected personal use versus business use. And so you have to be able to separate those. If you don't separate that out, you can get in a lot of trouble when you're going through an audit. I guess I should add that this applies to any piece of equipment that has mixed business and personal use. As soon as you dispose of that asset, say you sell the vehicle, any of the profits that you make beyond what you claimed in depreciation gets taxed as ordinary income. It's not a free ride. You do get taxed on it eventually. Most people will recognize that a used car is not worth as much as a new car. And that price difference is called